The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi everyone, on this December the 6th. Why I've been waiting for December the 6th? Because tonight is the webinar, the first of the series of 3 coming up. Wow, what timing. I'll show you exactly what we're talking about for the timing. Thank you to our hosts, great shows. Hopefully we can keep up that high standard. The E-mini trading down $1.23 at 2,202.75. Made a peak C. Now, sometimes the root is more important, almost always the root is more important than the derivatives. And in this particular instance, the S&P has already made a peak D in the Chapman wave. What does a peak D mean? Peak D says in the Chapman wave methodology, what we look for is most identifiable lowest low bar. Start counting the peaks. When you get to the fourth highest peak at peak D, other things can happen. And that's where you've got like a yellow light that flashes and you make decisions. But the target is to get you there. So now what we're looking at, because the E-mini has the same configuration as the IWM. What is the IYM again? IYM is the iShares US Basic Materials. Look at that. Yep. So we are so close to a leg C. Now, this is the reason why so far we haven't gone short. We've been holding our positions in the Dow, the long positions, almost all our long positions. We do have a couple of shorts. But what's really important about this is that going to new all-time highs, you would anticipate that something like the Russell 2000 would, in fact, not stop in the daily at a peak B, but go on to a C and a D. That's just the natural inclination of the Chapman wave buy mode. We always get not only that, in this particular pattern that I'll be discussing in webinar 2, not webinar 1 tonight, but webinar 2, December the 20th, I'll be talking about the MACD and the stochastic, and we'll have all the evidence by then. And the evidence is that in the Chapman wave squash phase between the stochastic and the MACD, there's a very quick and sharp move to a B and even a C. Then the stochastic invariably pulls back, and it takes a little while for it to get to the final D, and then other things can happen at that point. And that's where we are. So we are long the IWM via the 300% long position, but what I'm looking for is 134.11 to start leg C, and then it can chop around maybe just a tad higher for a day, and then pull back and then make a nominal D. I'm only anticipating a little bit higher to go here, and then we're going to get some kind of a consolidation. The configuration that I'm looking for, if you're looking at the XLF, not the greatest vehicle right now because it got reconfigured. Let's go to the BKX index, that's the root really. And that says we've gone to a leg E today, yesterday and today, and we're getting close to some kind of a pullback. There could be a recycle, and it could be a restart, Chapman wave instant restart. The way it's done it, the way the diamonds have done it, all of this has the look that says, yes, you could get an instant restart for a brand new ABC to the upside, but the technicals are suggesting that it's almost time for a consolidation. So we're getting close. Let's put it this way, a yellow light is flashing. And I'm going to be discussing this in great detail tonight. I'm probably going to do it just purely on the chart formations. Just look at this. What's the objective is to get you to a D. What did the 10-minute chart do this morning? It went from a trough at about 4 o'clock this morning in the 2202 area. 2200 area. Went to peak A, peak B, peak C, and there you got your D. What do you expect from a D? 3 things can happen. It could be a high-level consolidation that quickly starts a brand new buy mode. it could go to an E and even an F and then pull back sharply. So that could be an instant restart that goes all the way to ABCD. But what's most important is this is where you put the brakes on. You say, this is where if I've got a position on, I'm going to take something off and I'm going to put a stop on the other position. And if it gets taken out, it means that we're going to go down deeper. Well, at D is where you can get your deepest decline. And there it is, D for deepest. And we went from the 2209 area, round number high, to the low, most recent low of 2200.75. Haven't hit the low of 2200.25 yet. And I was going to draw a left side, right side price time match, but I didn't have time. So this is the consolidation repelled at the 9-period moving average. We'll be doing just a touch of work to introduce the moving averages tonight. There's so much to do as it is that I don't really need that until the second webinar. And all the time you can email me questions, you can ask questions. I'm really looking forward to it. Why? Because look at this. You've got the XAL. This is the airline index. Why is it not hitting? Oh, there it is. XAL. At a peak E, maybe this is an F. Maybe it's even a recycle. But we'll see very soon. I think everything about this says that we're getting really close to some kind of a consolidation. Weekly chart is in an F, unless it's recycled to a brand new F/B. It's a possibility. But all of this says that if you're long, you can stay long and just raise your stop because it's going to tell you, look, the technicals weakened, but the price went to a new high. That's a negative divergence if you're following the technicals, but it's a positive divergence in the fact that price is the arbiter of a trend and the price went higher. But once you get to the E's and the F's, D, E, F, you've got to be careful. I'm putting in an F right now. I'm not going to put an alternate wave count just because the technicals are suggesting that there could be a pullback very soon. Okay, let's get to the nitty-gritties. INDU, this is the Dow. It's at leg E. I have to call it an E because you cannot call anything until the day is concluded or the bar of whatever time frame you're looking at is concluded. And at this particular point, I'm calling it a leg E, but if it goes above 19274.85 today, that'll extend leg E. At this particular point, getting a bit cautious, thinking, oh, this is everything that we talk about in the technicals. And the weekly chart is still very strong. What can I say? I'm calling it F/A. We've discussed this before. But what's very interesting here is that in the 120-minute chart, we've got an alternate count that could have been A, B, C, D. I'll talk about that in a little while. Let's just get to the numbers because it's important. Today's a special day in the sense that I'm waiting to see what happens. You've got your peak D already in the S&P, but it's holding very well. This is the dolphin pattern in the MACD. You see the way it looks there? It's holding tight. It hasn't crossed negative yet. It's very close. Stochastic pullback from 98% to 72%. That's a negative, and yet the price hasn't pulled back that much, so that's showing internal strength right as of now. So let's just do this. IWM, as I said, it's at 133.02. It needs 134.11 to start leg C. You've got gold. Gold was down a little bit. What's it doing now? It's down 2, and the dollar is key because the dollar is holding well here, but it has pulled back since the 102.05 top. I'll be back, Basil Chapman, on the 6th day of December, webinar day. I'll be right back after these messages.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank Bank is a member FDIC and equal housing lender.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Basil takes your phone calls. Now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi everyone, Basil Chapman. So let's just get going with this. We're looking at, we saw gold was pulling back a little bit. Dollar, this is very interesting. The dollar's held very well considering what it's done over the last couple of months. But I'm not happy that it's pulled back in more. It looks more like an F than a B. This is a very familiar pattern to us. It's called the Chapman Wave falling arch, lower highs and much lower lows. And it needs, and when it does it, it'll be too late to do anything. But if in the next 3 days, the dollar goes above 101.54, not only will that be really positive action, that will suggest that there's a high-level consolidation, and it'll define quite clearly that the 102.5, 103.25, somewhere in that area will be the resistance, and then we could be having a trading band between, let's call it the 99s and the 103s for a while, because it's had a great move. It just needs time. But that also says that the EUR USD, which did, I'm using this as an example tonight, that this low right here cannot also be a high. I'll discuss that tonight. This is the bar from yesterday, because you need a trough before you can start your wave count. But what's really important, and I was going to do this yesterday, I don't think I did. I wanted to show the price, I think I showed it last week, that the price time match in the euro-dollar currency pair had suggested that the low that was made back in round about the 3rd of December at 1.053, with using the fulcrum, the plumb line of right there, of the 30th of May of this year, that was the previous year, then this year, May, takes you to at 1.10. Did I move my 1.109? Takes you to right about there where we broke down for just a tad, and then we closed above it. And we've done that twice now, 3 times. And that takes you to the 24th of November. So this is saying that in the arch formation with the left side, right side price time match, what does that mean? It means that the left side took as many bars to the right side using this particular bar as a plumb line, the midpoint, that is the midpoint being right there, the 30th of May. And this says that this is the cluster formation that we would expect if there's going to be some kind of support. So you're looking at a little bit of support here in the euro dollar, and you're looking at a little bit of weakness in the upside for the dollar. How either one breaks on the upside or downside is going to be very important. In terms of patterns, probably going to get to it more like next week, but that's important. And look, there's the arch formation. So all of this applies, and there's the lowercase h that goes to an M. And usually the second time round is where you get the big test of whether it's going to break the low, in this case of March of 2013 of 1.04 in the euro dollar. All right, these are things, patterns. We'll talk about this as patterns, but some of these moving averages, etc., we'll get more into the second webinar coming up in 2 weeks' time. Here we go. I want you to look at crude oil. And crude oil, remember, what is the objective in the Chapman wave methodology? Is to get you to that fourth highest peak. It's a phenomenon. I was going to send maybe 5 years, 6 years, 7 years ago. I was going to, more than that. I was going to send to Stocks and Commodities magazine the whole outlook of peak Ds. And I thought, this is something I've worked on. I don't have to broadcast it around the world. I'd rather do it on my show and do it in a different kind of a way. But that fourth peak is just an incredible tool, one of the great tools that I've ever come across. And look, here it is in crude oil. Why? Because we've made peak D once. That was that fourth highest peak on the 19th of October, come down to a trough D. Now, remember, my thesis says that the letters on the upside are much more important in the technical veracity of my technique than the letters on the downside, except that you've got to count the letters to the downside. Why? Because the letters to the downside give other important information. For instance, here from this peak D in the weekly chart, isn't it funny how it can go in daily, weekly? Doesn't matter. It's there all the time. I just showed it to you in the 10-minute chart. 10-minute chart. Wait a minute. I didn't even know what this chart. I must have hit this by mistake. So look at this. Let's see if we can get a peak D right here. This is the XAL 10-minute chart. So here is peak A, B, C. Unbelievable. Where do you get the deepest decline? You can get it from D. That's usually where it comes from. And lo and behold, we made a peak D in the 10-minute chart, and you got your deepest decline. How many times, not thousands, but tens of thousands of times since I've been here in 13 years have I shown you peak Ds? Wait a minute. A trough D goes to what? A peak D in the left side, right side price time. It didn't quite make it in the crude oil. It went to a peak D. Yesterday's leg D. Well, I can't say peak D. I have to wait for the day to conclude. But yesterday's high, 52.42, was leg D. And today the high so far is only 51.60. So this could very well be a peak D. And then we've got to watch out to see what happens after that. So evidence is right there. Let's look at the TLT. So why am I looking at the TLT? It's gone to a trough E. The TBT, which is the 2 times inversion of the TLT, has gone to an F, and it's holding steady. Now, this could be an example for me that we're going to recycle to the upside. And if we do recycle to the upside, this will be a great clue because it's made a peak F. There could be an alternate count. This could be F/B. And if there's a higher high above 42.15 in the next day or two without breaking down below, let's say, 39.13, it's trading at 40.89 right now, up 3 cents. That'll be a G/C, and I'll say that it's probably recycling. And look at this. I'm going to teach you about this tonight is where we get into this one. Trend lines. Look at this Chapman wave inside track repellent zone. Why do I call it a repellent zone? Look at the prices pulled back every time it hit that green line, went above the red into the green, called the repellent zone. And if it's on the downside and it's testing for the upside, it's called a propellant zone. These are techniques we'll be talking about tonight. Also be talking about this left side, right side price time match of the arch and of the cup formation. So now let me go to the next thing. So what we're looking at is within the context of markets. Where is the New York Stock Exchange, the very broad New York Stock Exchange? Got to look at that because it made a peak D, pulls back, goes to an E, pulls back, goes to an F/B, and is actually run. I haven't made a big deal. I did last week, just one day, I made a big deal of how strong the New York Stock Exchange is. The 2,000 stocks have suddenly just come alive. That and the Russell 2000 are now trying to compete with the Dow. The S&P and the QQQ series are lagging. Isn't this interesting that the New York Stock Exchange 2,000 stocks is trying to show us that it's making right now a leg C finally, but it's a gray C in the monthly chart. I'm going to be talking about this tonight. I'm going to be talking about what's the difference between blue and gray in my work. Blue usually says that you're in a buy mode and you're going to higher highs, and it's confirmed buy mode. If it's gray, it says, yeah, it could be a confirmed buy mode, but you're under a previous very sharp peak. So you've got to be a little bit careful. And therefore, I call it gray to just explain. It's not a negative. It's not a pejorative. It is just an explanation. Now, here's something that we need to look at just before we go to the break. I want to show you the VIX index. And the VIX at this point is down again at 11.81. That is buying pressure. And I don't want to fight buying pressure. I see this as the selling pressure in the VIX has a correlation that you look at with yields and bonds. I'll be back to talk about it with me.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Back, Dow's down 5, S&P's up 1.52, and let's see, we've got John in Philly. John in Philly, how are you?
Hey, Basil. Good day to you, sir.
And good day to you. John, can you just give me 1 second, because what you're asking about is going to take just a moment, and I just want you to get to this real quickly because I'm liable to forget. I had a couple of questions. One is X, which is U.S. Steel. It is in leg D. I think it's just about to have a little bit of a pullback, and that goes for most of the other steels. I gave that in my newsletter this morning. AK Steel, leg F. SLX, which is the steel ETF, is in making a leg E, maybe a peak E. I would not short these. I'd be waiting to buy them, and that's really what I wanted to just say because I'm liable to forget, and I had a number of questions about it. So, John, your question is specifically?
Yes, sir. I'd like to ask you about the NASDAQ December futures contract, the 30-minute bar chart to be specific. First, actually, two questions. It's a two-parter. One, the NQZ6, the 30-minute bar chart, if it rallies to new highs for the day, I believe will go into leg G on the Chapman wave count. And my question is, if that happens, is that a short on a trading basis as you see it? That's the first question.
Okay, so let me just do this real quickly. I've got the NQ. Actually, at this point, I've got the NQ continuous, which is exactly the same. I checked it out. It's exactly the same chart pattern as the NQZ. So I just thought it was a little quicker for me to get this here. We've got a peak E, and we've got an A, and we've got a B, and we've got a C, and we've got a D, and we've got an E. I've got an F. You got a G?
If it goes to new highs on the day from this point forward.
Yeah, okay. So there are three things that are going on. One is it's hugging the 200-period exponential moving average, and that to me is like a magnet, and it's saying that even if it was to pull back here, we've got to watch the 4781 area because it's going to keep trying to go back there. If it breaks under 4765, that's what I need to just double-check this here to see. I got a down arrow there. I got a plus sign because I wouldn't have known it was an up arrow until later. So I'm putting it right here as a plus sign. Eventually it became a signal that gave an up. Okay, here we go. So what I'm looking at is, because it's a peak F, and so far it's had the highest volatility since 8 o'clock yesterday, I think, or last night. It's had the highest volatility. And it's pulling back, and the 9-period moving average is resistance, and the MACD is negative. I'm surprised it actually went to that higher high and hit that Bollinger Band. It's not really a Bollinger, it's like a Bollinger Band resistance. And now it's underneath the 9-period, and it's underneath the 200. The level I'd be watching, if it closed on any, it doesn't even have to be more than one bar. If it closed any bar, it's at 47.75.75. If it closed underneath 47.68.25, let's call it 47.68, that point says, you know what, we're going to go into a deeper correction in the 30 minutes, which could last into tomorrow. That's really what I'm looking at. So if your question is on the 30 minutes, and at the same time you brought up the monthly chart, we're talking, let's see, a little mini box of fruit juice as opposed to a crate of oranges, because obviously 30 minutes when you're looking at a monthly chart is something, the monthly chart, which is at peak B, is very different. But I would suggest to you, look at the candle of yesterday in the NQ, the NASDAQ E-mini NASDAQ 100 continuous contract, or you could look at the December contract. Look how it got repelled at the 9-period moving average both yesterday and today. But look how it's hugging. Even though the technicals are quite negative, I'm going to suggest to you that there's a much greater chance that there will be a 5-point move to the upside over the next 2 days than a 5-point move to the downside if two things happen in the next hour. If in the next hour, the NQ, which is down 450 right now, if it can go to anywhere in the 47.77 to 47.79 area, that'll be the sideways continuation corrective formation that we're looking at from the very short term. But if it starts to break down, then you could go halfway into this candle. Then I would say 47.56 is probably the area that I'd be watching really closely between now and tomorrow. But I don't like the QQQ series, if you don't mind. I'm just going to switch for a second because they really look the same. The QQQ is I mentioned this, I think it was maybe 4 weeks ago when we made that peak F top and had the sharp down move. That was the November the 4th week, the election week. I said, I believe that the NQs, that the QQQ is in a trading range. It's going to be fading because of Amazon, which I didn't like, Google, which I didn't like, Netflix, which I didn't like, and what's the other? Amazon. And I thought that because of that, and even Apple I would include, that it's going into a sideways corrective mode while the leader, which was the Dow, would continue higher. I wasn't sure about the IWM, but I also mentioned at the time that I was surprised that the New York Stock Exchange was holding well. So let me just quickly sum it up for you. I think this is a rotational correction at highs. Because it's a rotational correction, it means it gives support to the weakest indices, and I'm calling the QQQ right now one of the weaker indices. And this is saying to me that there's not going to be a breakout to the upside in the market in this phase. We have to wait for the conclusion of the Dow and I would even put the IWM in this category on the upside, and the New York Stock Exchange. And I think that corrective phase is going to come starting next week. I know a lot of people are talking about end of the year, market goes to new highs. My theory has always been if the market holds well into in October, after the September-October correction, you usually close near the highs of the year. This year is a slightly different year. And I think the QQQs are telling us that the upside is very limited. But in the meantime, there should be a rectangle formation giving comfort to the downside so it doesn't break down. I think that breakdown might come a little later on, towards later in the month. Am I answering your question?
You are. Thanks so much. I do appreciate it. Just one parting thing. I'm looking at that QQQ chart that's very helpful, so thanks. If by chance there's a setback in this down towards that, say, 114 level, and I'm looking at your daily chart, would your inclination be to speculate that likely be a tradable low down there?
No, not yet. I tell you why. Because at that point, the Dow and the S&P and the IWM will have been giving it up as well. And therefore, you will at any point now, the Dow and the S&P can give it up because they've already done what needs to be done, gone to Ds and Es. So I'm just waiting, and my clue so far has been I thought the IWM would lead a little bit more, a little bit longer. We'll see. That still might happen, but we're getting real close to some kind of a pullback. Hope that helps you, John.
Thanks so much for your help, Basil. Appreciate it.
Thank you for calling. John and Philly, we'll be back straight after these messages. Dow's down 24, S&P's down 0.54. Mixed market. Be right back.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Hi, folks. So here's something that many of us over the years have thought of as being, wow, why didn't they use that? And that's ocean power technology. After all, when you see the ocean pounding away, if you're looking at Ross Poldark and you're looking at the waves in Cornwall smashing against the ocean. I love that in Cape Town, South Africa, right at the tip. You used to get those massive waves smashing in the springtime against the rocks. And I used to watch it for hours on end. Well, Ocean Power Technology happens to be a company, and it's OPTT. And Steve asks, let's see what I say. Hi, Basil. I love the show. Oh, thank you. Could you look at OPTT? I'm thinking of a position for a year-end move up on short covering in the stock. Thanks, Steve. Steve, this is a really tough one. I like the way that it's held. I love the way that it has these involuntary spikes. It's almost as if this looks like when I look at a biotech stock. Now, very once in a while, I just made a big deal in my news, in my webinar tonight, that you never use the low bar to call it a peak A. The low bar cannot be a peak as well. You have to wait for a trough. Once in a while, I do it it's just for visual clarity. And it says to me that I can call that an A because then I'm going to get a B, I get a C, and a perfect D in the weekly chart with a down arrow. Everything fits beautifully except the fact that we didn't get a low bar first. But it just says to me that it's like a news event. It's like Ocean Power Technology, trading at 3.42, down 24 cents. OPTT is the symbol. It's just like a perfect setup for news. And it looks to me like I would not be surprised if you look at the publicity back in, March of 2016, there was this whole thing that was put out, how wonderful, whatever technology it is. Then it pulls back, has a big spike from about 1.25. Within weeks, it just goes to 2.86. More than doubles. Hey, then it pulls back again, and it pulls back in a stair-step way down to 137. And then it has a little bit of a rally. It goes from 137 to 679. That's 400%. Pulls back again to the 9-period exponential moving average. And then it goes from it's not enough, folks. Now it's going from 2.33 to a high of 15.65. But you see the rhythm of the news events? And now you've got the same rhythm. I would say I'd wait a little bit. I think that you've got to wait until you say end of the year. If you're looking at the rhythm of this, I would set up, because you're watching this very closely. Now, I'm not recommending this to anybody else. This is for Steve. Steve, I agree with you. It's got that rhythm that keeps saying that there's a news event that I don't care. It's got nothing to do with the company. The company is lousy. The fact that it keeps coming back to 3s and 2s, even if it goes to 15, says there's nothing there, just news. Treat it as a news event. Get a cycle. And the cycle says that, yeah, going into the end of December, I would not be surprised. It might be January, but I would not be surprised if there's another spike, and this time it takes it above the 5.89 high of the week of the 18th of November. But don't even think of holding it as a real thing. This is play money. Of course, we don't like to even talk about play money, but this is looking at the rhythm. As a company, there is nothing here. As a rhythm, if you want to play the rhythm method with OPTT, my suggestion is keep watching those swings, and you can wait for. I'd even say let it rally before you get in. Let it actually go to 4.26 or 440, and then just hop on board. But that's the only way. And then you're out. You get that spike, and you've got to get out. But other than that, nobody should be touching this. OPTT market cap only 19 million. PeakD says 9 million in cash, not much debt. I can see 30% short float. Underwater tide turbines, says Duffy. OPT looks like, yeah, it's a penny stock. So I'm just saying this is not for anybody else. Steve asked the question. He's obviously done this before, considered this before. And the only way I would do it is I would treat it like an option that can go to 2, because that's what it keeps coming back down to. It's a 3.42. Expect a 50% decline at some point. But if you're lucky, you're going to get one of those big 200 to 300% run-ups. I'd have a little patience. I'd either not do anything and then buy it, as I said, at like a 243 or something like that. 343. Sorry. Let me give you the right figure. The right figure would be, 435, somewhere around 435. But this is just in and out, right? And the other thing is, don't marry the stock. Don't hold on. Don't do anything to the stock that keeps you in long term. It's not, absolutely not. If it spikes up again, it might be you want to short it. But I would not do that. I just treat it as a trade. All right, enough with that. And next thing I'd like to look at, Sarah asks about DB. I looked at DB I think it was a week ago, and I said, hey, finally it's off the ground. This is Deutsche Bank. I think there is life in Deutsche Bank. I'd be very careful. I wouldn't get a big full position. But if you want to trade this, I think as a trade, it started and you move to the upside. I'm going to call this A, and I'm going to call that B. And I'm going to say, yes, at 1786, I think this is a stock that's going to test the 19s. So as a trade, I say, yep, it is. Well, I don't think that was a question. Sorry. The question is, corrective action of bear or new bull market for Eurobanks? That's a fantastic question. I'm not sure I'm the person to be able to answer that. I showed you the euro dollar is starting to form some kind of a base. The dollar's having a rough time breaking to new ground. I need the week to finish before I can really talk about it in a longer term aspect. All I'm saying is that Deutsche Bank looks to me like it has further upside and has very strong support in the 15s at this particular stage. I think later on there could be more bad news, but right now it's acting very well for the first time. So that's the answer to that question. BAC was a question, another one. BAC, this is very interesting. BAC read that there are leaps were bought into 2019. Well, I have a problem with that. Is that where what the start of the bull looks like? The answer to the question yesterday was, is this in the bank stocks? Is this the start of a bull phase? And I'd have to say, yes, it is in the banks, if my monthly chart is correct. But I would be really careful buying it here. If you're looking, I think I said this yesterday, if you're looking out to say Bank America at 21.89, I'd have no qualms nibbling here, saying it's going to go to it looks like it wants to go to the 23s, 24s. So I'm prepared to buy a little bit. But the real buying should be some market sensitive news event that just tanks the market. Market drops 700-800 points in less than a week. And then you want to be looking at the banks. And then I would say Bank of America, $19 to the 17.50 area. If it gets back down into that area, that's where you want to be looking at it for the next phase for the bank stocks. This is hope, and there's some veracity to it because yields have gone higher. But my thinking is they've got a little carried away. You need to have a pullback for a safer entry. And I think Bank of America has done a lot of things correctly. They are one of the banks that have been very strict, and they've tried to be as faithful to and diligent as possible, from what I understand. It could be wrong, but that's what the chart seems to be saying. We'll see. All right, Basil Chapman, Tiger Technicians Hour. We'll talk a little bit more about my webinar tonight for those of you who are interested in looking at chart formations that repeat over and over, and that's what we look at in the Chapman Wave. We'll be back. Dow's down 13, S&P's up 0.62.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Learn how to trade options with Swim Lessons. Brought to you by TD Ameritrade. Think or swim. Next on TFNN.
Just a real quick question about XOM. XOM, we looked at, you remember XOM and CVX yesterday, and I said, XOM is acting well as a dividend stock. I think it could be in a range that says that with your dividend, 4.5, I don't know what it is, 5.3%, I don't know what it is. It gives you a little bit of a cushion, and it says there's a good chance that Exxon at some point, even if it pulls back, will come back to the 87.34 level where it's right now. And it should go to a D. It's failed at C before, and it's got it to a C. I think it's going to do quite nicely. I didn't see it all that much on the upside, maybe 88, 89. That'll be nice. 90. 2-3 points, but what I do see is that the 86 area to 85 so far is a good comfort zone for support. So yeah, I don't know if that was the question, but that's what I'm looking at. Now, let me just do this in the remaining minutes we've got. My webinar tonight, let me go there right now. TFNN, go to the front page of TFNN, and we are looking at right there. Chapman Wave 3-session course. Simple technical tools to analyze charts. The 3-part course on the Chapman Wave. Well, the Chapman Wave part of it's the proprietary techniques that I developed over all the years. that I'll be discussing. Most importantly, tonight's webinar will start off, so it's at 6 o'clock to 7:30, and I'll show you right now if I can just get there. Legs, I'm going to go through the legs. Well, this is what we're going to be discussing. So the simple technical tools to analyze charts. Most importantly, webinar 1, the core Chapman wave concept. I'm going to show you how to identify the peaks, how not careless. You've got to be very careful. That's your only obligation. How you go from an A to a B to a C to a D, what you can expect, the peaks and the troughs and the implications. To correctly identify the peaks and the troughs, their function on the way up and down. Remember, I make a big deal, more of a big deal on the way up because of the letters than the way down, but you do want to have the letters. I treat the letters on the way down a little differently. They're the same sequence, but very often on the downside, you only get one single leg to the downside or two big ones, like an A to B equals C to D. This is the lightning rod. And then you start a brand new buy mode. It's very different to the upside technique. So the buy signal and what level it upgrades to a buy mode, the significance of a peak D, the fourth highest peak. This is the pattern we're looking for. This is what I'm going to be teaching, identifying each peak. It just goes on and on. I'm extremely thorough. And I will introduce you, yes, if you haven't done it yet, to the MACD and the slow stochastic. But most importantly, what I'm going to be doing is showing you that without any, you don't have to know my Chapman wave technique very much, because after all, if you can just get to the fourth peak, peak D, look what can happen. Look how many times it happens. So that's what I'm going to be teaching. What's the importance next time in the second one? So you'll be able to archive it, review it as many times as you want. You also get my newsletter. In my newsletter, I'm showing you every single day. Look what I do. This is the daily chart. I'm discussing it in great detail. If I can quickly find it right over here. I give you the overview every single day. I give the overview. This tells you what I'm anticipating. I said right here, I said, today after selling early and maybe having a bounce, a mild digestive phase could carry into midweek and then rally. I'm looking at this very closely. I tell you exactly what's going on. I show you the waveforms. If I can just find it real quickly before we wrap up on the day. Hey, what happened to my, I can't find them. That's very interesting. Hey, come back. Oh, there it is. Okay, so this is my Dow chart. I just lost it. I had it for a second and lost it. But every single day, I give you all these different, here we go. So I give you this. I give you the analysis on the Dow. There it is, the Dow chart with my analysis, why I think that we're in a bit of a trading range right here with a chance that we can sneak to a leg F to the upside. I talk about the 120-minute chart, the overview, and I discuss it so that you get to understand what I'm doing. Hey, I think if you sign up for the amount of money that you're going to be paying, I think it's going to be really worthwhile. And if you become a subscriber, you're getting it at a discount. So this is exciting. You'll get my newsletter for 5 weeks, and you get my analysis, as well as you can give me the questions. I'll send you back answers. A lot of fun. Have a great one. I'll see you too.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
This is TFNN.